Welcome, fans, to another episode of Seattle Real Estate Podcast. I am Dan Edwards, your host. I'm here to provide you the inside scoop with living, working, and playing across the greater Seattle area, including the East Side. It is Wednesday, May 8th, 2024, and we're coming to you live on Facebook and YouTube. And feel free to chime in with any of your questions or comments. We should be able to see those in real time. If you're listening to a recorded version, please make sure you subscribe, rate, and review our podcast. You can find our podcasts on Spotify. You can find them on Apple Podcasts and any other streaming location. We're live on YouTube and on Facebook. So we would love your comments, subscriptions, and reviews. Sharing is caring, as you know. Real estate fans, we have a exciting show today. We're going to start off our Real Talk segment talking about some of the affordable housing efforts in Seattle and Washington State. In the mortgage moment, we're going to have a conversation with Tucker about the financing of some of these options, and we're going to use a term called ADU, which is an additional dwelling unit, financing them, building them, and also we're having our good friend Jeremy Morgado with ReUp Westcoast to discuss how to prepare your home to sell for maximum value with no upfront money out of your pocket. Should be a pretty good show. I look forward to it. So let's jump right into our Real Talk segment after this short little bumper, right? All right, excellent. So today our conversation about affordable housing efforts. And I thought I would kind of dig deeper into some of the things that have been happening in Washington State and specifically in Seattle, Everett, Eastside, Issaquah, is back in 2023, the Washington legislature passed a pretty comprehensive removal of many zoning restrictions. And in 2019 is actually when Seattle got busy at doing this to kind of come up with ways to have more affordable housing. But even before that, Washington formed the Washington Housing Finance Commission. And actually, I think I'm going to bring Tucker. Tucker, are you around? I'm going to bring you on for this because you know a bit about the Washington Housing Finance Commission and some of the down payment assistance programs. And this is one way to help increase affordability, because one of the biggest barriers to people getting started in real estate or into their first home is that financing. So that's actually been going on for probably more than 20 years. Is that right? The Washington State Housing Finance Commission?
Absolutely, yeah. And it's probably the most generous down payment assistance program offered across the country.
Yeah, and kind of break down how that works specifically for a borrower.
Yeah, so within Washington State Housing Finance Commission, they offer many different programs, but essentially they cover your full need of borrower contribution for a loan. So the down payment requirement, which on a conventional loan is 3% or FHA is a 3.5%. And what Washington State Housing Finance Commission does is they grant that money to a home buyer with a no interest little mini loan that doesn't require payments and is not paid off until you sell or refinance the home in the future. So it's a great way to lock in today's housing price, get in, and get those down payment dollars at no interest.
Right. Now, is there a cap on how much that down payment, like money cap on how much that can be?
So there's multiple different programs. They're 3%, 4%, or 5% of the purchase price. So the maximum with that program would be 5% of the given purchase price.
So 5%, but like when I say maximum, I mean 50,000, 100,000. Does it matter?
It doesn't really matter. It depends on which program. Some of them are capped at 15,000, but there are other programs within Washington State Housing that are not capped. So they go up to the conventional high balance loan limit. 977 200, and then 5% of that. So do some quick math here. 977 times 5%, probably just under 50 grand.
So under 50 grand. So essentially, in order to make housing affordable, you're sitting there, you're making a rent payment, and maybe it's at $3,500 a month is your rent payment. Well, the equivalency in today's rates is probably about a $600,000 home, right? So you're not necessarily going to qualify for a $600,000 home, but if you didn't save up a down payment and maybe you do qualify between $750 and $850, well, down payment assistance program would allow you to cover that down payment there's going to be some money out of pocket, right?
Yeah, so typically there's a closing cost left over. So unless you negotiate in for those to be paid by the sellers, then that is a buyer responsibility. So I always tell people, 1 to 3% of the sales price is really all we need from a buyer. But I've had 2 success stories already this year where we were able to get buyers into homes with almost nothing out of pocket. They do have to pay for an inspection. So, $300 to $500 there. And then whatever amount of closing costs are their responsibility.
Oh, that's great. Okay, perfect. So down payment assistance is really a program in Washington State that really helps make housing affordable, because that idea of having to pay that. Now, do they have to make payments on that down payment assistance as they go?
They don't. No, it sits silently in second position on title, and they don't pay it off until they sell or refinance the property in the future.
Right. So sell or refinance. So there's no loan payment. It's not added to your loan payment, paying that extra $60,000. It's actually a pretty excellent way to get in. And I have a success story. One of my clients, four years ago, maybe more, bought a house in Everett with down payment assistance. He was cash rich, but savings poor, So he went in, bought a nice house in Everett for about $300,000 at the time. And 2 years later, so it must have been more than 4 years, let's say 6. 2 years later, sold that home with the equity, paid off the balance, took the down payment that he had, the equity that he had, bought another home. And then 2 years later, sold that home and bought another one. So now he's in the home that he really, really wants to. The home in Everett wasn't the one he wanted to, but he, in 6 years, progressively put himself in a situation where now he's in the home he wants. And I think sometimes people are very, how do I put this politely, short-sighted, where they look at it from a standpoint of what they can get now, and it's just not enough. I get it. There isn't a lot of great stuff out there for the price. But when you look at it on the long play, even 6 years, he ends up with a really nice house that he really does like, and he had all the down payment that came from basically growth and equity. So, all right, so that's one way that Seattle is working on the efforts to increase affordable housing. Now, another way is in new construction, but unfortunately, that is falling woefully short, because the idea is you increase supply and you're going to reduce demand. But basically, I'm looking at a statistic here. This statistic is by CoStar, talking about construction starts in 2023, and they're well below historic average. I don't have that chart for you because it's not queued up, but let me just say that the last time we actually had the builder confidence and the money for building to be where it needed to be in order to keep up with immigration, and that means, it doesn't mean, it just means people moving to this area, that type of immigration, in order to keep up with it. The last time we had that kind of momentum was 2006. Since then, one of those two things has not come together. One, the money, meaning builders don't have confidence in the consumer, so they're just not going to build because they can't afford to make the earnings that they want to make. And then the other is the market. And really, we'll talk briefly about the GMA, the Growth Management Act in Washington State. This is a state law that constricts building. And, the idea behind the GMA is to restrict building and keep it dense, so that we can protect our wild spaces here in Washington State. I think that there should be a conversation on expanding that in order to provide more affordable housing. Like, look at it from an affordable housing standpoint, because I do believe we can do that. So what's really keeping new construction is actually the cost of money keeps these builders from building a lot. They're keeping it at a rate where they can actually make good money versus no money. And that's just the economy of the Seattle area. So I won't get too deep into that. But what I did want to finish off within this Real Talk segment is kind of the movement towards what we call Dadus and ADUs. Dadus ADUs is kind of how it's said. So if you hear that term out there, Tucker's going to talk about financing these, but I thought I would just go ahead and define what they are. And let me see if I can present. Screen share. This one. So Seattle really kind of blazed the trail with this website. It's called ADU Universe, and essentially what they have done is they've streamlined the process, and it is no longer a full plat in order to build on the back of your property. what we call an accessory dwelling unit. And I'll just actually go to some designs to show you what we mean by accessory dwelling unit. So this property right here is a 2-bedroom, 1,000 square foot, detached ADU. And so this is an example of a pre-approved DADU plan. So it can be no bigger than 1,000 square feet. It connects up to the water and sewer on the property. It connects up to the water, sewer, electricity. There are other simple building things, but essentially what they've done is they've created a list of pre-approved floor plans. And there's other sites that have even more DADUs. And then this website, if you just Google ADU Universe, you'll find the step-by-step guide, but it is actually fairly simple. There are some restrictions where you locate it, but you can see this picture right here of a house there, and then this brand new one. So what you'll see is if you're out there looking for a home and you start to find homes that are 1,000 square foot, that's exactly what these are. There's some information about, they are considered condos in many cases now. What they do is they take a property and they condoize it. So to be specific, a condo is a common interest in a piece of property that all the property owners kind of own their airspace. That's a way to put it. So you own the airspace, but the common areas is the property. So in these cases, there may be homeowners, they may be homeowners' dues, but really it is a way to create density without subdivisions, right? Without dividing the property physically. And essentially the process, I think, let me see here, there was a great, there was like a really, I think it's here. Yeah, it's where do I start? Step-by-step guide, pre-approval, can I build? So interactive, you can search your lot, you can take a look at all those things. And essentially what's happening is that's creating more density. It's creating more households that are actually affordable. Although the ones that I saw in Seattle were $750. That was in West Seattle. And I think in downtown Seattle, they're probably closer to $850 to $1 million. But here it is, browse the gallery, pick a pre-approved one, select the design, prepare a site plan, and then get a permit. I talked with the city planners in both Issaquah and the city planners in both Everett. These are two areas that I'm kind of talking to about this situation. Everett has already adopted the more dense floor plans, or excuse me, more of the density, whereas Issaquah is still working on it. So according to state law, July of 2024 is when all of these municipalities have to comply with these restrictions. So the best way to do this is if you're interested in knowing can your property qualify, is one, you can just call the city. But if you don't know the questions to ask, reach out to us and we'll be happy to get to the details, because I've already got a list of kind of the specific questions to ask in order to help you to streamline the process. So now we're going to take a short commercial break, but then we'll talk with Tucker about how to get the money to build these DADUs. So come back after this short commercial break.
Are you tired of not knowing where your money is going? Do you feel like you start getting ahead on your finances, then get hit by an unexpected expense and feel behind? Doug Peterson with Get Priorities Straight helps guide you to getting your money to do what you want it to do instead of wondering where it went. Doug has helped ambitious, busy, successful people be delighted by handling their money wisely. To have a conversation with Doug, call 206-264-4424 or email meeting@letsgps.com or info@getprioritiesstraight.com.
Well, welcome back to the show. I didn't formally introduce Tucker on the previous segment, but he is our guy from Guild Mortgage. Many years experience in the business. And I also didn't ask, what did you do this weekend? But that doesn't matter. I actually want to know, do you have a tea time book for this weekend? It's supposed to be spectacular.
I do, and I have a mountain that I plan on summiting this weekend as well.
No, which one?
Well, we're still evaluating conditions because it's early season. So either Mount Tenerife, or if that doesn't come together, we'll just do Mailbox Peak.
Mailbox. Got it. Okay. Mailbox would be a safe bet, right? The other one.
Exactly.
Okay. Very good. We'll be safe no matter what. We need you back on the segment next week. So, I mean, obviously your wife would like you to come back. Is she going with you? I should just ask that.
No, she's gonna pass on this one.
All right. Yeah. So definitely be safe. That's awesome though. Take some pictures. Want to see them. Bring them to the show so we can show everybody. All right. So let's talk about financing these things. First off, we kind of described a little bit about what an ADU is. Do you want to add anything to that?
No, the way I describe it is it's just an additional residential living unit on the same property. It's just a way to kind of add living quarters to an existing property.
Yeah, and I want to specify the difference between kind of the affordable housing aspect and the real additional living quarters aspect. Is, this kind of goes back to a mom-in-law suite, right? Is having a spot for mom, a rambler maybe in the back of the house, so that she can live and have her space while also being able to be independent but be cared for. So that is a real practical reason for this. The affordable housing or even separate living situation where it's somebody owns the house now in yours, these are two different ones. So, but the process is still the same from a financing standpoint, correct?
Exactly. Yep.
Okay. So why do you think these things are so popular?
I think it's a variety of reasons. I think you hit the first one is you have just aging parents or aging family members, and they're wanting to keep those family members nearby to care for them and age in place and avoid going into nursing homes. So that's one aspect of it, is this multi-generational living. But then the second, I think, biggest thing is housing prices and the ability to create income generating opportunities with an existing property they own.
Yeah. So whether you use it as an Airbnb, home office, extended family, those types of things. Okay. So if you're a homeowner and you're kind of looking at whether or not you can qualify for this, perhaps you reach out to the team and we help guide you through the possibilities. What are our options for getting funding?
Yeah, so there's a variety of options, and we're talking about somebody who owns their existing home and wanting to add it. And there's a variety of reasons. And I think the first one we should talk about is how do we obtain funds to build this without disrupting the current loan that you have? A cash out refinance has been the tried and true way in the past for people to do home renovations, add a pool, same kind of concept of adding an ADU. But what about these 2.5% to 3% interest rates that people were able to get in during the pandemic? They don't want to do a cash out refinance and disrupt that loan. So the cash out refinance is, of course, one option. But the other options would be a home equity line of credit, and whether it's a variable interest rate option or what we have here at Guild Mortgage is a fixed rate solution where we can tap into that equity without disrupting their current loan at that historically low interest rate. So that way they're just borrowing the construction expense at today's interest rate. So those are the two ways that we can do it with an existing home. And then the last way would be a renovation loan. So through Fannie Mae, a conventional mortgage, they have a Homestyle Renovation product that allows people to either purchase a new property and obtain additional funds to build an ADU, or they can refinance out of their current mortgage into a Homestyle Renovation loan to get additional funds to build it. So there are many different ways that people can obtain financing to build the project that they're looking to build.
So then what you're saying is that second one or the last one sounds like a hybrid, is like you get a loan for the balance, but then you get a loan on top of it?
Exactly. Yep.
Okay.
Yep.
And in the renovation one, for example, I've got a property that sits here in Everett that I looked at that the downstairs is completely unfinished. Its current value is below 640. I believe its after rehab value is somewhere in the mid sevens, maybe a little higher depending on how well the remodel is done. And then I'm also eyeballing that for some ADUs. Do you think the bank will utilize the value with the ADUs as an after rehab value in order for one of these home renovation loans?
They do. Yes, that's a really the coolest piece about it is they'll use the after renovation value, and we can go to 95% of that value with the new loan. So, you mentioned it was an original value of 600. It's now a value of 900. We can do a loan up to 95% of 900,000 because we're going to have the appraiser say, what is the value after this unit is built? And the down payment requirement is still 5%. So it's a great way if somebody is looking to buy a home in this scenario, we do the renovation loan up front and we can construct that unit before they even move in.
Yeah, if you're watching this video, I want you to imagine taking a house at 650 and turning it into 3 properties where the main unit is going to now sell for 8, maybe 758, and the 2 detached ADUs are going to sell for 500. So that's going from 650 math-wise to like $1.4 million in value.
Yep.
That's an investment that you can do, and the essentially is instant cash flow if you want to rent it, or if you have some in-laws that want to live on the back, and you build that Dadu on the back, and now you've created a nice piece of investment property that will actually bring you more money in the future. So yeah, that's cool. I did not know you can use the purchase renovation for that. So we should kind of run some scenarios through to see how much that costs from a cost basis and where you end up afterwards with it built. I'll send you the numbers on that, Tucker, so you can look at that. That's kind of cool.
Absolutely. Awesome. We could maybe do a deep dive into that as a case study.
Yeah, we should. We've talked about doing case studies here. We should definitely take the time to kind of write out the homework. And I've got some of those numbers together, so maybe we can put something together for one of our future podcasts. Awesome. Tucker, how do people get a hold of you?
You can call me at 425-757-9202. That's probably the easiest. Call or text, or you can find me online at all the major platforms. Google Tucker Maxwell Guild Mortgage, and you'll find me.
All right, stay with us. We're going to be joined by Jeremy Morgado right after this short commercial break.
Thanks, Dan.
Are you worried about your health holding up as you age? Buying a new home often involves paying your mortgage for 15 to 30 years, and you'll need to be at your best to keep working strong as you age. Cummins Chiropractic and Wellness has helped families just like yours regain optimum health as they work hard to provide for their family. The team at Cummins Chiropractic and Wellness treats patients with both crisis care and lifestyle care with our state-of-the-art individualized services. We have seen thousands of people reach and maintain their best health as they age. To learn more about how chiropractic can help you achieve your best health, you can call Cummins Chiropractic and Wellness at 425-590-9158 or reach us online at CumminsChiropractic.com.
Welcome back to the show. That commercial reminded me I got to make sure I have my chiropractic appointment set up. We are joined by Jeremy Morgado. He is a seasoned professional, and he probably has a chiropractor, I'm guessing. Yeah. Okay. Great. He's also a dedicated husband, father to 7 in a blended family, a visionary leader in construction and real estate. His partnership with Kaylin Morgado extends beyond home, fueling their personal and professional lives. With 25 years of experience, Jeremy excels in identifying market opportunities and fostering growth. Leading 3 diverse companies, he's committed to innovation, quality, and exceeding customer expectations. Join us as we delve into Jeremy's extraordinary journey, family, and entrepreneurship. Welcome to the show. Ooh, I think you're muted. We probably should unmute you.
Hey, there we go. Can you hear me now?
Yes, right, I can hear you now. All right, so we're talking about renovating your home to sell for maximum value. Then we're going to get back to the ADU Dadus conversations.
Sure, 100%.
So kind of share with me your background in construction and real estate.
Oh, yeah. So actually, I've grown up in construction and owning construction companies, anywhere from new construction all the way to remodel. And I currently own 3 different companies. They all have different focuses, but they're all in the construction field. And the one that we'll be talking about today is called ReUp, which ReUp is a nationwide company that helps sellers get the maximum value out of their home with no money up front out of their pocket.
So what inspired you to start that company?
Well, so I didn't start the company, but I bought into the franchise, and it really because it aligned well with my wife and I's vision for the future of our life. Someday we want to have a nonprofit organization where we help those elderly or single moms or someone of that nature who owns a home that needs to be remodeled but doesn't have the money to remodel it. We want to come in and handle that remodel for free through like a nonprofit. So when this opportunity came to us, and we realized, wow, this is one of the first business opportunities that we've come across in the real estate world where everybody wins. The seller wins, the seller's agent wins, the buyer wins, the buyer agent wins, and then we win, the community wins. Like it's an incredible product that really helps out people.
Yeah, I like that. Win-win solutions is very important to me too. So that's awesome. So what hurdles are you facing in establishing ReUp Westcoast?
It's just educating people, because it is one of those situations where it does almost feel like it's too good to be true. A lot of people are like, well, wait a minute, I could really do this? You mean I just give you the keys to my home? You're going to come in and finance the remodel, handle the remodel, manage the remodel, and help me sell this for more money, and I don't have to pay you a penny up front? It's just it's overcoming that hurdle and helping people understand that, yeah, we just did it. We just helped a couple. They made $36,000 more in their pocket in a matter of 9 weeks. And
yeah. I think, Jeremy, you and I have met maybe 2 months ago. I think we've kind of been chatting. I've been throwing some deals your way and trying to see if they work. And one thing that stands out to me as I talked through the process with Jeremy on one of the deals is I had somebody approach me kind of at the 11th hour. They were about to sell their house to a contractor that was going to help them get cash quick. They just needed to sell. And I said, wait. Before you do that, let me look at what they are proposing. And unfortunately, I was introduced too late to this thing. They signed the paperwork, and it became a 6-week nightmare for them. And guess who won? The winner was the contractor. The contractor made the bulk of the cash. They made what they made off selling it quick, but all that improvement that your company would bring to the table, they got zero benefit. And the guy,
we see that a lot.
The guy raked it.
It
was horrible.
You know, one of the unique aspects that we bring to the table that a lot of people don't is once we set that construction budget, it's set. There's no change orders. There's nothing. So like we're currently doing a project here in town where we thought the deck just needed some minor repair. Ended up, we took the whole deck apart. It actually had to be completely redone, and we had to build a brand new deck. And we covered that out of our pocket, and it did not increase the cost to the homeowner or to the seller. So it actually would be taken away from their profit. And so, you know, that's where we kind of working really hard on protecting our clients and helping our clients is just being like, hey, we're going to set this budget and we're going to stay on this budget. And you know, this is how much it's going to cost you no matter what we come across.
What drives your passion in construction and real estate?
Oh man. I love seeing old become new, and I love creating things. And, but man, with this product, it really is just helping people. You know, we just got, like I said, one of the projects we completed was literally the wife was due, and he was trying to figure out how he was going to move into his new house, remodel his current house, run his business, and have a brand new baby. You know, we were able to help them out, like I said, and they made about $36,000 more out of their pocket. Another house we're working on right now was an elderly lady who has bad arthritis. So we paid for all the pods, we paid for the movers, we helped her move into her new place, and now we're remodeling this home so that she could actually take the equity out of this home and put it and use it towards her retirement, and not necessarily having to give that away to an investor that would come in and lowball her, because that just was the condition of her home.
So you included in the bid for repairs the cost to move her into her future place.
Yeah, and actually it wasn't necessarily in the remodel budget, but we fronted that money that we will take from at closing costs.
Oh, okay.
Again, that closing cost or the remodel budget is fixed. And then we went, okay, how much money are you going to need to move? How much money are you going to need to do all these different things? And so that's what we came in and did. That'll come out of the closing costs at the end.
Got it. So basically problem solving, right? I know that I've done this myself, where it's kind of tough because cash flow for me, I take money out of my own pocket and I'm going to spend it for X, Y, or Z. Maybe it's a paint job, maybe it's carpet replacement, something like that we get paid back. That's something that you guys can do. It's not there's a difference between the construction budget and then the things that are through the organization. Okay, cool.
We can even help people who are in pre-foreclosure. We'll get them out of, if there's enough equity in their home after the remodel, we'll get them out of pre-foreclosure. So we save their credit and we help them make money at the end of it.
So what would you say, as you look at, there are people that have rejected your guys' offers and ones that have accepted it. What's the common theme of those that have said, oh, this is right for us?
It's them being able to understand the process and the system of how much money we can make for them. And again, the biggest hurdle that we're having right is just educating people that this is something that's not only done in the Northwest. This is a nationwide company that's seeing success, that's growing like crazy. That whole mission was designed around helping people. So we really do want to help you. We're not here to mess people over or take your money. Some of our competitors don't have that fixed construction cost, and then they come back and they change order you, and you thought you were going to make $40,000. Next thing you know, you're making 20 or 10. Some of them are actually in massive lawsuits because of that. And so, and again, we really want to protect that seller, and so that's how we do that.
So, are sellers paying interest on loans while you guys are doing this work?
Nope, we do not. It does not cost them anything. So, if I come in and say it's $100,000 remodel, it's $100,000. We're not charging you interest for that money, and if it sells in 3 months, great. If it sells in 9 months, it's still $100,000. We're not charging the interest on that.
So then again, how do you guys get paid?
So when we get paid is, so let's say you brought me a home, and we'll use small numbers just to make the math easy, right? And it's worth $400,000. And we come in and we do a $100,000 remodel. That means we're all in at $500,000 with the original value of the home, and then the $100,000 that we put into it, right? And then let's say you as the realtor come in and you sell it for $600,000. So there's $100,000 difference in the upswing, right? So we take 50% of that, and that's how we make our money. And then the seller takes 50% of it, and that's how they make their money. So in this scenario, just for giving us the keys to your home, we just made you $50,000 and it cost you nothing.
Gotcha. So essentially, it's based off a 50-50 split of the proceeds after you get your cost of work done, and all of that stuff is done prior. Like that knowledge, exactly what that number is done before you pull one hammer out, basically.
Yep. And it really positions the seller from a position of, maybe I have to sell my home for less to an investor, or have to give concessions at closing or whatever, into a place of now they're actually a part of being an investor. They're actually allowing us to come in and help them elevate that value, and their position is that they're now an investor in their home, and then they get to take benefit of the profit of that, because their asset that they're bringing to the table is the home, and we're bringing the money and the team to actually remodel that home for them.
Yeah, let's talk a little bit more about the team. So what does your team look like, and how do they approach a project?
As far as the construction process side of it?
Yeah.
So we have construction managers and we have project managers that work, and with the team, we have estimators. Right now, a lot of the estimating that we're doing. So the cool thing is, between our main construction manager, our main project manager, and myself, we've done over 350 remodels and flips for the real estate world. So we're really adverse in it. We really understand what it takes and what it means to get the project done. And so, that's our team, I guess. And then obviously any subcontractors, any employees, and every area is a little bit different. Like if you're in Idaho, we have all of our construction teams here. Is actually our company doing the remodel. If you're in Washington, we have a project manager over there. We'll be managing from afar as construction side, and we'll be utilizing subcontractors.
Okay, awesome. Let's see, anything else? So we talked earlier in the show about DADUs and ADUs. Yep. Is this something we can utilize your services for?
100% we can. We can, like if you look at the example where you were talking about, you said where it's originally valued at $640,000. Again, so to remodel the original home, we can handle that remodel and make sure that's done. And then when it comes to the ADUs, we will, as long as the profit line makes sense and the margins make sense, we will pay for and build the ADU for you, so that you could sell it at the different market. You said 800, I think 500 and 500.
500. Yeah, 800, 500. Yep. Mm-hmm.
And so we can come in and actually finance the remodel, finance the ADU new build, and manage all of that and construct all of that, so that you could just go on market and sell it.
Awesome. All right. Well, how do people get a hold of you, Jeremy?
The best way is my phone number, which is 208-420-3313. They can find us on Instagram under ReUp Westcoast. They can find me on Facebook under Jeremy Morgado. We're also on Facebook as well as ReUp Westcoast.
All right. Well, thank you so much for coming on the show. I appreciate it.
Yeah, thanks, Ben. I really appreciate being a part of it. Thank you.
Yes, you bet. All right. So that concludes our podcast. I want to thank our guests, Jeremy and Tucker, for coming on the show. Thank you guys very much. If you have any questions about the show, reach out to me directly, 425-276-7008. We're always looking for new local businesses to have on the show. I appreciate it, and have a wonderful, it's going to be beautiful weekend in the Pacific Northwest.